Radhicka Kapoor, because you particularly look at labor data and at jobs, often these growth numbers conceal distress, unrecorded distress. What are you seeing in terms of this anomaly between this supposed bounce back and between what is actually happening to jobs and unemployment?
So there are really 2 points here, Srinivasan. The first is that if you look specifically at the Q1 numbers that have just come out, the 3 sectors outside of the agricultural sector, which account for bulk of the employment in India, these are still very much below their pre-pandemic levels. You showed these statistics in the beginning. If you look at trade, hotels, restaurants, communication, these accounted for about 18% of total employment pre-pandemic. And the gross value added in these sectors is still 30% below what it was in pre-pandemic levels. Similarly, the construction sector, which accounts for a significant share of employment, GVA is still about 15% below pre-pandemic levels. So not only is it the case that, all these employment intensive sectors are very much below pre-pandemic levels, but the other problem with this GDP data is that these numbers are largely based on what you get from listed companies in the corporate sector. They adequately capture the distress in the informal sector, which has borne a disproportionate burden of the employment losses, the income losses, and the wage losses. So a lot of the growth that you're actually seeing in these numbers is driven by these large corporates, which, as we know, witnessed record profits last year. And how did they witness these record profits? It was not because they were investing in expanding output and employing more people, but quite to the contrary, they were actually cutting their input costs, in particular labor. So despite this, sort of rebound that we are seeing in the numbers, we don't see any such turnaround in the employment numbers as reflected, by CMIE or by the government's own PLFS data,
right.
Quarterly PLFS data.
Okay.